I am.
Let's do It's Only Money.
Yeah, here we go.
Helping people passionate about planning for their future rise above investment myths to build real wealth. Isn't that really just common sense financial advice?
It's both.
Oh, okay. It's Only Money with Scott Brown from Edgewater Family Wealth.
Good and loud for our buddy Scott Brown.
Yay!
EdgewaterFamilyWealth.com. 37 years in the biz. What is up, partner?
You got to clap loud because I'm in South Carolina.
Yeah. It's a little muted up there. How's the weather up there in South Carolina right now?
I don't even want to know, man. It's just going to upset you. It was like for the last 2-3 mornings, it's been in the 60s, low humidity. It's a little dark and dreary right now, but on average, it's about upper 70s, low 80s.
Man, that's so nice. I am not even the least bit jealous.
No, it's only 90 here.
No.
Yeah.
Feels like 94.
You had to play some golf this morning in that wonderful temperature as well.
Yes,
Yeah.
It's quite lovely.
Hey.
I did play a little golf.
Hating you more by the minute. Hating you more by the minute.
That's why I'm here.
All right, very good. Scott Brown runs Edgewater Family Wealth in town for 37 years, dishing out great financial advice, getting people in the right position as they approach their retirement, making sure their money is taken good care of. He's been doing it for a while. And got a new billboard. I just saw that. Good job, buddy.
Yeah, man, we're pretty stoked about the Real Radio, iHeart Radio, whatever it is, radio, some kind of radio that I'm on here.
Mm-hmm.
It's on Edgewater Drive and next to the donut shop, so that works out pretty well.
Oh, get a lot of traffic there.
Yeah.
All right.
Yeah.
If you start getting a lot of cop traffic, you'll understand.
I thought it, but I wasn't going to say it.
Yeah.
That's why Jimmy's here.
I'm a low-hanging fruit kind of guy. I'll take it. All right, let's get at it, man. I mean, every single week, Scott sends us a few things to kind of discuss as we move forward, trying to learn more about how to take care and manage our money. I know that we don't have any events coming up through the summer, but you are always open for consultations.
Yeah, I think it's important that people realize that, you can just make a phone call. I think people often think this has to be like a 3-hour ordeal, and sometimes it is. But if you just have a simple question that Edgewater Family Wealth can help you out with, you can send the question through EdgewaterFamilyWealth.com, or you can request a 10 or 15-minute consultation to answer a Social Security question, because as everybody knows, we have Greg Rossler on staff, the premier and certainly the most knowledgeable person in Central Florida on that topic. So it's Social Security or Medicare. If you have just some basic investment questions or how to get started or any topic, if we don't know, we can probably find the answer or at least come close to finding the answer. So certainly reach out, give us a shout, set up an appointment, whatever you feel like doing this summer. We're open and ready.
What is the retainment rate for you when you retaining rate, I should say, when you do one of the seminars like you did last Saturday and you had a lot of people show up, who can't make it during the week? Do a lot of those people turn into second or third calls, or, and you've said before, maybe they're not quite ready for me at that point, but do you get a lot of people that have that continuing interest in what you do?
Yeah, people follow us. So if you come to a seminar, or even if you don't, if you just go to the website and sign in and connect with us, we'll put you on our newsletter. So I usually write something about once a month, push it out. My asset management team puts out data on the markets themselves. So we put out a video every week on that. And any other events that we have that maybe the general public doesn't know about, that's just for our mailing list. If you get on the mailing list, you will be privy to that as well. So yeah, we tend to have 2 or 3 interactions with people if they come to an event, for sure. Very cool.
All right, let's get to it. It says here, are you happy with your advisory relationship? Now, for people who don't have an advisor yet, and they're kind of moving forward, I don't know how you're going to attack that, but if you're happy with somebody, it says, are you happy with your advisory relationship? This kind of seems to be, is this the battle of I'm being told what I want as opposed to I'm being told what's right?
I don't think it's as nefarious as that. As you've said many times, I've been doing this a long time, and there's a lot of really quality financial advisors out there in addition to ourselves. And what I would say is there are 3 things I think that go into an advisory relationship or that can cause a problem. Number one is process, number 2 is communication, and number 3 is the relationship itself. So if you've stopped and you said, hey, I don't know how I feel about this relationship. And the reason you're thinking that is you're looking at your statement. Maybe the returns aren't what you think they should be compared to some index or something, or you just don't understand how the math that you're looking at on your statement equates to success in retirement or in taking retirement income. I would call that a process and design issue. If you don't feel like you're talking to your advisor, but you're still not clear, like, do we have a process or am I just in a product? If you just say, hey, I walked through the door, this guy's got an annuity, that's what I ended up with. Or did I walk through the door and a whole life policy for some strange reason that I don't understand made sense? What you have there is likely a process and design problem. Now, the second thing, which is communication, I would say you have a communication problem if you're kind of happy with the math. You're looking at the statements, you're kind of looking at your balances, and you're like, I think this is going to work out okay. I feel like it's going to work out. But you haven't spoken to your advisor in 2 years or a year and a half or even in 6 months. So you think the numbers look okay, but you've not had enough correspondence or a thoughtful enough conversation to know that it's going to work out, right? So in that case, I think you have a communication problem. The third problem that people often have is when neither of the first two things are working out. And then I would say you have a relationship problem, right? If you just don't not being communicated with and you're looking at the math going, I don't think this makes sense, I would say number 3 is likely true.
Does it seem like you just don't like the person? Can that come into play? Like you just simply personalities don't mix? I mean, you could have the knowledge and you could have everything else in line, but maybe you're just two different people altogether.
Oh, 100%. I mean, if you don't like the person, you got to go, right? I mean, I will tell you this. I don't know if people have picked up on this or not, but I have a strong personality, right? And I'm very, there's people, a woman once said this to me. I don't think it was very nice, but she said, Scott, people either hate you or they love you. And I was like, well, which camp are you in? So, I get that about myself, that the way I speak, and I'm pretty straightforward. And some people that's not their bedside manner. They're not digging it. That's cool. You need to find somebody who maybe approaches you in a way that's more easily communicated to you. So, or who communicates in a better way to you. So for me, I think relationship and trust, because if you don't like somebody, if you don't like your doctor, you're probably not going to listen to them when they give you advice, right? And I would say it's equally as true with a financial advisor or an accountant or a lawyer. In fact, the 3 things I just said apply to any professional you're dealing with, right? You have to have process. You have to understand the process. You have to have good communication, because if you don't, you have a relationship. So yes, to answer your question, you most definitely must like the person.
You can get into a situation where you have somebody, like I have somebody that I deal with professionally, and I think they're a little bit of they're a weirdo. They're a straight up weirdo, but they are very good at what they do. So I try not to focus on the weirdo part, and then just try to focus on the thing that he does for me, and it's okay. Now, it's not one of these, he's handling my 401k or my investment scenario. There's really not a lot. It's a low level impact kind of scenario, but I can see where if for me, I would want the more serious the scenario. I would want the person to at least be able to see eye to eye with me and have a level of trust there that I know that I could lean on.
Well, I think there's also a level of candor you have to have with a doctor or a financial advisor, that if you don't like someone, you're not likely to be candid with them, I don't think. So I think if you don't like them, you simply have to say to yourself, this is a personality issue and I need to move on.
Right, yeah. I mean, again, I think that somebody can be blunt with you and still have your best interests at heart.
For sure.
But you just kind of have to figure out whether or not that's how you want the information kind of meted to you,
Well, I know, I have a couple of clients who are very type A, very aggressive people, and not in a bad way, just they're go-getters. And we have some, I won't say heated, but some very serious debates on what direction we want to go with one thing or another. And I've said to each and every one of them, how I know I have a good relationship is with you is that you let me tell you you're wrong. And we have a debate about that. They're not going to fire me because I said, no, I don't think this is a good idea. In fact, I think it's a terrible idea. They're going to listen. They're going to debate me, maybe sometimes heatedly, and then we're going to come to a conclusion together. Yeah. And that's no different than a marriage, right? You might say, I am certain that every married person listening to this has had a debate with their significant other, and sometimes they get heated, but at the end of the day, there's a trust and a like, and of course, in a marriage, a love that kind of gets you through that.
Yeah, for sure. Talking to Scott Brown here from Edgewater Family Wealth for It's Only Money. You can hear it every single Tuesday at 5:20 right here on the Jim Colbert Show. Let's move to the next one here. Why research analysts are no better than a monkey with a dart. And it's kind of funny because Deb and I talk about this with polls. And of course, now in the political election season, all you hear every day is a new poll predicting this or a new poll predicting that, or there's a good chance this is going to happen. And of course,
don't listen.
It's a 40%, just shot in the dark.
Yeah.
Nobody really knows. And that's kind of what I liken this to am I close?
Well, and I'm going to take some heat for this, but it's not the first time I've said this. I think research analysts are well intended, but I don't think they're any better at predicting anything than anybody else. They get paid. I have a saying, people who get paid to talk generally will. And in the case of research analysts, I'm going to walk you through something if you'll hang in there with me at home. But in March if we use Enron, everybody remembers the Enron debacle, right?
Yep.
Enron was a hot stock. It would be like, I don't know, GameStop or something today. It was just everybody wanted it. It was exciting. It was a no-lose company. The shilling was on the cover of every magazine. So March of 2001, Enron was trading at $61.27, and Prudential Securities rated it a strong buy. Now, hang in here with me. It's going to take me a second. In March, later that month, Merrill called it a near-term buy at $55. Stay with me. On April 16th, Goldman called it put it on their recommended list at 59. On April 17th, Merrill reiterated their buy at 60. On June 8th, Bear Stearns, remember Bear Stearns?
Oh, yeah.
Yeah, they're not around anymore. They called the stock attractive at 51. So remember, we started at 61, and now we're at 51. June 15th, the stock was trading at $47. JP Morgan called it a buy. In August, the stock was trading at $40. Remember, we started at 60.
Right.
Bank of America loves this stock now, and they call it a strong buy.
Wow,
October 3rd, it was at $33, and Goldman put it on their recommended list. I'm going to cut to the chase here. On November 7th, Merrill, who rated it a buy at 50, is now calling it neutral at 11. Finally, Goldman Sachs now calls it a market perform in November at $5.
Wow.
And finally, at 36 cents, RBC calls it, wait for it, an underperform.
Yeah.
So again,
wow.
So no doubt, right? So my point is that these companies, these major names that who hire these people out of Harvard and Yale to do research, got it wrong the entire time. So they got you buying the stock at 60, and then it's an underperform at 36 cents. This happens over and over and over again. And think of the terms that they use. Near-term buy, reiterates attractive. These are very vague terms that when things don't go well, they can go, well, we just said it was attractive. We didn't say buy it.
Right. Now, Scott, let me ask you this. Is that reflection, because now I'm interested in that, are those reflections when that thing goes from 61 to like 45 and they're still saying it's a buy, are what they thinking is to buy this because its market cap was 61 and that is now the bar that they assume it's going to return to? Is that why it looks so attractive still to these big firms, or are they just completely uninformed?
I don't think it's that they're uninformed. They have plenty of information. What they don't have is any way to know what's going to happen. Again, a stock like NVIDIA, which is trading at, I don't even know where it's at, 70, 80 bucks earnings on its earnings, which are 70, 80 times its earnings, is considerably more expensive than most stocks its size, right? So most stocks trade at 20 times earnings. So sometimes the stock will defy gravity. The stock market can stay irrational longer than you can stay solvent, somebody once famously said. And again, they can have all the math they want. They can look at the earnings per share. They can project the earnings per share. They can look at cash flow. They can look at all the key performance indicators they want, and the stock can still eat it, right? So my point is there's a lot of information that they have that is helpful to some degree if you're doing accounting. But if you're trying to predict where a stock's going to go, it's really a crapshoot for most of them. And I don't think the research analysts get it right any more than the rest of us.
Scott, one quick question coming in on something you said. I said a little bit earlier in this segment. We only have about 30 seconds here. If you could help me out of here. Serious question about Mr. Brown. I always hear him say they may not be ready to be his client. What is your criteria for being a client of Edgewater Family Wealth?
Well, you have to have enough liquidity that it makes sense to pay us, right? I mean, I don't think it's fair for us to charge somebody with 40 or 50 grand a whole bunch of money to do planning they don't need. So I think it's people with 250, 500,000 or more. Our average client probably is a little over $1 million. But I'm more than happy to help people. I'm willing to help everybody in Central Florida get to the size where they can become our client.
And that's the key, right? I mean, I think people focus on that, right? What's that?
Yeah, well, that's me. I mean, I went to the seminar, and I met. I went to had a follow-up meeting. I got some good advice. They did the overview, and I'm not at that level, but I have steps to take to help put me in that direction.
And that's really the goal, is kind of at least moving towards something that is a long-term plan.
Yeah, I want more clients. There's no doubt about it. But, I want to help people get into a position that it makes sense for them to use us.
For sure, man. Always good seeing you. Again, that's EdgewaterFamilyWealth.com. Remember, they do consultations. Even though we don't have any seminars going throughout the summer, their phones are still completely open and ready to take your phone call, whether it be about your 401k, whether it be about Medicare, whether it be about Social Security, any of those questions, these guys can handle it. And, of course, if you're looking for a financial advisor, they can help you there as well.
Appreciate it.
He's got a couple books out there as well. It's EdgewaterFamilyWealth.com and Scott Brown. Thanks, Scott. Good seeing you.
Hey, woohoo!
All right, 407.